Hey guys, let's talk about conventional loans for a second. So nobody ever tells you what a real conventional loan is. They don't really break apart the loan itself. So today I want to do that, and I want to walk you through the exact process of how a conventional loan works. So number one, what is a conventional loan? It's a very vanilla loan. It's usually insured by Fannie or Freddie. Those are the two main ones. And it's a normal loan up to 97% financing, so only a 3% down payment. Anything above an 80% loan to value, which means if you're putting less than 20% down, requires what's called PMI, which is mortgage insurance. So what's mortgage insurance? Mortgage insurance protects the lender in case you default on the mortgage. It doesn't protect you. If you default, the lender gets a check for a certain percentage of whatever was defaulted on, but it's required on all conventional loans if you put less than 20% down. So doesn't mean you have to put more than 20% down. It just means that if you put less than 20% down, there's going to be mortgage insurance included in your mortgage payment. Now, the cool thing about mortgage insurance is it's score-based today. So that means the better your credit, the lower the mortgage insurance. So it can be very inexpensive. And on the flip side, if you don't have great credit, it can be pretty expensive. So conventional loans, pretty straightforward. They're going to look at your last 2 years tax returns, 2 years W-2s, your bank statements for the last 2 months, generally speaking, and pay stubs for the last 30 days. They're also going to want a copy of your driver's license generally. And with that information, they're going to go through all those details and make sure that your debt to income ratio is no greater than 50% because that's the max allowed for a conventional loan. And then as long as it meets all the specific guidelines that the automated approval system requires, then you should be approved for a conventional loan. Pretty straightforward. Now, there are max loan amounts with conventional loans right now. And I think in 2021, they're $548,000 is the max loan amount. But with that being said, you can purchase a home for any amount of money you want to purchase it for, as long as your loan amount does not exceed $548,000. So if you want to spend $1 million on a house and put down the difference between $1 million and $548,000, you can do that and still get a conventional loan. Average time to close a conventional loan right now is about 30 days. I mean, that's subject to where you are and the appraisals and everything else. It is possible to get what's called an appraisal waiver on a conventional loan if you put down enough money and you have good enough credit and assets, and there's all kinds of little things that they look at. The automated system may give you the ability to waive an appraisal. Doesn't mean everybody gets it by any stretch. It's actually pretty rare, but occasionally that does happen. If I were you, I would plan on getting an appraisal, paying for the appraisal because it's going to be a necessary item. So very straightforward process. It's the loan officer's job, that's me, to make sure that your specific information fits the box of conventional lending. And if it does, then we make sure that you're aware of that and get you interest rates, go over the details, and talk about your different loan terms and different loan possibilities. So I hope that kind of gives you a general idea of what conventional loans are really about. They're the very vanilla loan, very straightforward, non-complex. It generally has some of the best interest rates on the market. All right, guys. And you don't have to do a 30-year fix. There's lots of different terms available, 10-year, 15-year, 20-year, 25-year. There's even some unusual terms like a 27-year, 28-year. Lots of those different things are available if you want to take advantage of them. And conventional is generally the program you would use on a refinance as well. So if you're doing just a refi rate and term, that's probably the program you'd want to refinance to if you have at least 20% equity in your property. Or if you're in Texas and you want to do a Texas cash out loan, it's a conventional product as well. All right, guys, hope that helps. This is Steve Ferguson, the loan officer, Thrive Mortgage. It's great talking to you. Have a great day. Bye-bye.